Okay, everyone, welcome back to the channel. Don't mind the hair. I literally just got back to the home office not too long ago to see what Powell said. And, to update you guys that are watching right now of what I heard, what I told our Discord group at the time, and what I see possibly happening. So let me go over what Powell said first. At 2 o'clock, this is before he makes the statement. So at 2 o'clock, the Fed funds rate came in at 75 basis points. That was already priced into the market. What wasn't priced into the market is at this time where they see the terminal rate going, which is the highest it gets to next year, and the Fed funds target through year end, as well as their GDP prediction for our economy. All was very bad. Less GDP than originally expected. The year-end funds rate higher than expected, and the terminal rate higher than expected. So that came out here, dropped the market all the way down to a low of 380 and bounced. Now at 2:30, which is right here, you had Powell take the podium and make his statements. All he said was the most hawkish things that you can imagine. How they're going to need to substantially restrict policy, make it so that the economy slows down no matter what it takes. And the algorithms trade this thing all the way up to the highs over here, which is just one of our key levels, and then turns around. And now we're breaking all types of support on the daily chart. We're making new lows, and we're kind of breaking out of this trading range that we were currently in. So for me, the way it looks is we're going to continue maybe 1 or 2 more days of seeing a bigger sell-off and then rallying, because we're getting really oversold on the RSI on the daily chart. We could just put that up here. Now, I do think that stocks and earnings are going to have to be re-rated. And that's what's going to cause, I think, more of these washouts. So let me just get rid of this. So more of these type of washouts that you see. The RSI is very low. When we get those washouts, RSI hits oversold, a lot of times we'll start to bounce. So while I'm expecting some more selling, more re-rating of stocks, bonds went through the yields went through the roof today, which is not good for the equity market. And it's likely that they put us into a recession by trying to get inflation down. It really is as simple as that. We didn't fight the Fed in 2020, 2021. We told everybody, stop, just dip by everything. The Fed has monetary policy so easy and loose and accommodating. And now this year, you can see the downtrend in the charts. Why would you be fighting the Fed this year? And we shouldn't be. And that's why we're continuing to make these lower highs on the year. And if we make a lower low, that's anybody's guess. But I do think there's going to be a lot of support down here. So, I mean, we're still selling off. If you guys look at this on the 1 minute, and I got to get rid of this. Look at this day. We were up like 160 points on the Dow, and then all of a sudden just went all over the place. This is what I expected here, and I'll actually show you guys. So right around here, which was, let's see, it's 3 o'clock. right around here, the highs, right at our key levels, around 250-ish, 245. I wrote here in our Discord, right here at 256. I wouldn't let this little algo rally fool you. So algorithms trade today. This is an algorithm type of trading. That's why I tell everybody just stay out. Don't even try to trade this. It's not good for the market. They said higher for longer. Now, this is when the market, the S&P was up all the way to 388. I looked into taking puts right here. I was looking into puts, but the options premiums were so expensive. They were so expensive. Now, obviously, should I have gotten in and just dealt with it? Yeah, could have made a fortune trading this down, but I didn't. Trading on days like this is not really recommended at all. But now that we're breaking out into new lows, I would feel more comfortable, that we're going to possibly see that low come in for the year, or at least try to test it, because we're really not that far away. So, just to re-summarize everything, Powell was very hawkish today. The market did not have that priced in for the rates higher for longer. They did not have that priced in. Nobody cares about today's 75 basis point move. That meant nothing. It was how long are they going to keep rates? And all he said was he's going to keep rates higher for longer. That's obviously going to affect growth and then earnings. So stocks are going to have to come way, way more down to get that PE where it should be. All right. So guys, hit the thumbs up for the video, and I will see you back on the next one. Take care, guys.